Hello guys, welcome back. Today I want to talk about macro mini Nasdaq and index futures on the opening session. That's on a Sunday 6 p.m. and this gap right here, some of the people don't know how to deal with it, or I'm gonna teach you how you can collect some of the liquidity cash right here and put in a bank account and have a stable living, or have a pretty good living with only this session right here, or this move right here. Okay. There's a lot of manipulation when it comes to opening, but I want to tell you that this move right here, when you just enter, when the candle dropped, or when the gap has just opened below the closed session on Friday, it opened below the closed session on Friday, and on Sunday it opened it opened below the closed session on Friday. Okay, so there's a gap right here around how many points? It closed on right there, that's around 945, 24,945 to right here it opened on 24,750. That's around 200 points. 200 points, that's enough, guys. You can just place around 2 contracts or 3 contracts and collect up to this side here. That is 900. That's around minus 50. Collect 150 points. 150 points if you put 2 contracts, or if you put around maybe you enter here, so maybe you collect around 120 points. That's enough for you. You don't even have to trade until Thursday or until big move happens. Okay, so what I'm going to talk about today is this: on every opening session, be it on a Sunday, every opening session on a Sunday, there must be, first of all, a pullback. A pullback to where? 76%. I'm not even anybody is getting me. Every market session, be it on a forex, be it on a stocks, be it on a futures, be it on a crypto. I don't know about those crypto, but I know every market session there must be a pullback. Okay, so what am I going to talk about? This is when the market opens at 6 p.m. on a Sunday on a Sunday evening. So this week right here smashed by getting down. Okay, it goes down, then created a top high, telling the traders we are going high. Okay, traders who are right-minded on a Sunday, that maybe on a Friday they got wiped out by the markets. Okay, so on a Sunday morning when the markets opened, they are just angry at the market, so they entered. Some of the people, or maybe the beginners, they'll enter the market like this, and they say that they wanna enter this market so that they can take out some profits, but that is just a temptation. Some of the ICT guys will call it a Judas. Okay, So these Judas entice some traders to tell them that the market is going up. But no, if it happens to you that if you place, look at this is the opening candle, okay, and just below this week, look at it, they closed, this candle opened at 24,684, 24,684. That is here, okay. Look at there, candle open at 24,684. Is there any candle that pass that? Look at it, look at this one, look at this one, look at this one, look at this one. All candles did not pass this candle right here. Why? Because it's the opening candle, it didn't get its price. So what can you do with this candle right here? If you find a candle like this, you don't even have to place a larger stop loss. When you stop loss, you just put your stop loss below this point right here, okay, that is 24,675, or below, or I can say around 25 points below the entry price, okay, 25 points below the entry price. Then you enter, maybe it has entered, you have entered maybe here, or you have entered maybe here, depending on what time you open your charts, okay, or depending on what time your mind tell you, okay. So maybe you entered here, okay, right? So you entered here, okay, then you don't even have to follow it through, you just go back to sleep. Or if you're in Asia, or if you're in Europe, or if you're in America, or you are in any place, okay, just place it and be sure that this is a very, 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 very sure model that no one is willing to teach you. But I just come here and I've taught you for free. Imagine for free, guys. Some of the people, they'll tell you to pay some mentorship, okay, some mentorship of around $200. That is the upfront. Then if you complete for that 3 months, you pay another $2. Oh, if you pay for that, you're getting conned, or you're just a foolish guy. I teach it for free, okay. So on every opening session on a Sunday, if you placed the opening price just here, okay, your entry point just here, and then you do what? You place your take profit just way above 76 points, okay. That's enough for you folks, enough for you guys, okay. It's enough for you. You take out your profits and go do something else, okay. Why does the market does not pass this opening price right here, okay? It because the market open for a discount, okay. In the Sunday, the market's open for a discount. I don't know if you're getting me. You know, some people are trading because maybe another person trade, or another person trade, so you wanna enter the markets and just hit hit, take profit, hit. No, it doesn't go that way. You must understand, why does this gap happen? Why does this move came up to this point? Why does it so this gap happened right here? Is it because of what? It is because of the traders were given a discount. So the buyers entered the price, the sellers failed. Okay, seller failed to enter the price and failed to break the what? The opening price. Okay, this candle right here, where is the opening price? 24,684.75. The high is 24,735. Okay, this is the high, 24,735. The low is 24,631. It was a big week, a very big week right here, very big one. Okay, that's how it happened. Okay, so if you collect that with just placing your stop loss right there and taking your TPs right there, maybe 2 contracts or 3 contracts, this is a pretty good living. Okay, so what can you do when the charts has already given you this setup right here? You know, with this setup, you'll know how the whole week is gonna behave. Okay, like the whole week, how it's gonna behave, like from the Tuesday, Monday, Wednesday. By what? By following another step. Let me tell you what happened to the next step. Okay, so what happened is that when the traders made the 76.5% of the expectation, they decided that they cannot continue buying because of what? They did not meet the price. Okay, so if they did not meet the price, what next? The sellers occupy. The sellers enters aggressively on the Asian session. So on the Asian session, when the sellers enters aggressively, they faced a resistance right here. When they face the resistance right here, it is because of the entry price of this market right here. Okay, the entry price right here faced the resistance that was here because of this Asian session. The sellers were aggressive, so they break or they broke. If your English teacher was Spaniard, you will say a break. If your English teacher was Estonian, you will say broke. Okay, so they broke or they break this entry price or the opening price of the what? Of the new week opening gap. Okay, so what happened if they broke? You could set your Fibonacci right there, and it will give you what? It will give you a 70 or a zenith. A zenith. I'll say a zenith. Okay, this is enough. You know, some of the people will wait for 9:30. You don't have to wait for 9:30. You don't have to wait for 9:30. As long as you know this move right here. Okay, as long as you know what to know at this price right here, it does give you, there's a opening price right there, there's a lot of candles, then there's a resistance right there. Then you know if this resistance happen, there will be a good candles take off going north. Okay, meet the intermediate, meet the long-term high right there. Then they failed to comply with the price. The price did what? In the opening session of the Asian session, they decided to go short. or decided to go short at what? At Asian session. In the Asian session, they faced a lot of resistance right there. You can look at that week, those weeks right there. They did what? They failed to continue the price. Okay? So, they did what? They meet at 24,500. This is not a coincidence, guys. It's not a coincidence. Most of the sellers or the institutional buyers, they mostly sell or buy at larger prices. If it is 25,000 or it is 24,500, they meet at 24,500. It is a total engagement of conversation with these institutional buyers. Some of them even don't know where this price is going, but most of them, they mostly communicate with the price. Okay? They mostly communicate with the price. So what? They met right there, facing a lot of resistance, But if I was I met that 76% right there. Okay? Take out my stop loss, take out my take profit right there. Then what? I'll wait for New York session. On the New York session, I already knew what is going to happen. Why? Because the market failed to comply, okay, on Sunday opening. So if the market could comply by closing this gap right here, I will know for a perfect reason that the market is not going to go up at any given point. If this gap wasn't closed on a Monday, okay, it'd be closed on a Tuesday, it'd be closed on a Wednesday. So if the market closed this gap on a Monday, that means what? The market is a bearish market for the whole week. What is this guy saying? How does he know that the market is going to happen bearish for the whole week? No. It's a skills, guys. As long as you have these skills, you will collect a lot in the. No one will tell you that this is the thing that is going to happen. No one will tell you that this until you spend time with me in these charts. Some of you will tell you to pay this, pay that, pay this. Me, I'm teaching it for free. Okay? For free. Okay? They say free is dangerous, but mine is not dangerous. Okay? Whatever they said, okay? Or whatever they say, whatever. So, the market did what? Created the intermediate lows right here, traded inside there, below the opening price. Why did the market did not break below the opening price right here? Why the market did not break the opening price right here? Why? Again, they failed because this opening price right here contains a lot, what can I say, a lot of need a lot of volatility to break. So when the traders got fetched out here, they entered a strong buy, another move right here. Okay, you know, some will tell you that according to this candle right here, this candle will tell you that it's going to go up. No, it doesn't show that way. Okay, the market reacts according to the motives that happened on the last occasion. if the last session happened to disguise the other session, the market will try to cover those discounts, those gaps, those imbalances, their fair value gaps that was left on the previous session. Okay, so what happened right here? Intermediate lows, intermediate highs, intermediate lower low, intermediate high highs, intermediate lower lows. Then what? When the market hit the intermediate lower low, what does it do on a New York session? 9:30 hits. Then what? Boom. Boom. With just one candle. Boom. Boom. Breaking the opening, new week opening gap. Okay? Just with that, folks, just with that, you may now enjoy the fruits of your labor that you worked for the whole Sunday, for the whole Saturday, that you have been studying the price. Some of you, they will study the price for the Saturday, for the Sunday, but they don't know what will happen. Okay, you'll study the price when the markets offer you something like this, something like this. So what I'm telling you guys is that go to your charts, see for yourself how it presents. Okay, if it presented the wrong way I'm teaching, don't come watch my stuff. Go watch somebody else, or go to mentorship. Go buy a new mentorship course. Okay, but me right here, I'll be teaching this stuff. Okay, so I wanna close there. And hope you enjoy this stuff. See you, and I wish you a good trading.